Well, is the US equity market resuming its uptrend? The short answer is yes. Let's look at several indices. First, US mid-cap and small-cap charts. On the top part of the panel, we have the small-cap, which are making higher highs compared to the January top. And we have also the mid-cap on the lower part of the channel, which is basically right now challenging the former high. This is a good sign because that means that small and mid-cap are outperforming large caps. They are outperforming the S&P 500. And that's usually the sign that a top is not imminent. That means the bull trend can go on. Then we have a second indices. The Nasdaq 100, representing mostly also the technology sector. It is making higher highs in March and now again in May, June. This is represented also by the rising trend on the upper panel of the relative strength of the NDX 100 versus the S&P 500. This is clearly an uptrend. And we'll see also that the momentum is up on the stochastic and on the MACD on a weekly time horizon. That means we still have more upside. Quid of what's happening on the S&P 500? Of course, our best case scenario of a month ago on the red path here is about to be realized slowly as we are going to challenge the former highs of 2872 in January. What will happen next will be another story, but right now we are in direction of the upper Bollinger Bands with a relatively strong momentum and MACD crossing up. We noticed here in green the outperformance of the small cap versus the S&P 500, while the emerging market here in orange are coming down. That means the S&P outperform emerging market, but we'll come back to that later. Short term, on a daily chart of the S&P 500, we basically have been broken above the upper Bollinger Bands, which was flat already for 4 or 5 days, and that opened up a clear test of 2800, the March top, and possibly around 2850, 2872 later on. We see the momentum is crossing up, so the overbought situation right now can last for a little while, allowing possibly just a pause for a few days, then resumption of the uptrend. What's happened in the rest of the world? Well, the situation is a little bit different in Europe. First of all, we have to notice this dash black line, which is coming down in a downtrend. And after making a low in February, it is retesting that low right now. That means Europe is underperforming the S&P 500. Hopefully, it is a double bottom and it could rebound here. So we have the chance possibly that what we've got here is just a pullback and it will be following slowly the US market, but underperforming. We'll hope to have bottoming oscillators soon. Situation is a little bit better in Japan, with a rising relative strength versus the S&P 500 in dark dash line, which is just posing now as if things were just similar as in the US. That means Japan is not anymore outperforming the US. This is represented by a slow and gradual rise toward the upper Bollinger Bands, and we should reach 23,000 pretty soon, especially due to the fact that the momentum here is crossing up again and the MACD is still positive. Now the problem is in the area of emerging markets which are underperforming the S&P 500. Let's take the example of China. China basically from January has been somehow underperforming. Now it's kind of just flat, meaning it's performed as well as the S&P 500. Recently, here in orange, we see that China is again rebounding versus the other emerging market. That means China is really the leader again. That's represented here in this chart by a small range with ascending lows, and slowly we should grow through the resistance around 49 towards probably the former top. We see the momentum is rising here on the stochastic and soon bottoming on the MACD. The other major emerging market was India, and that was the darling in the 2017 area last year. However, now it has been underperforming the S&P 500, and it is struggling to break this downtrend line here. Right now, things could be hopeful because momentum is turning up, so we have a chance of a rebound, but a slow rebound. And finally, the trouble is in South America, represented here by Brazil. Here we had kind of a big sell-off between 47 and 31 with a huge spike here last week. Clearly the market has been underperforming, and that has been dragging the group of emerging market as a whole. During this troubling time in Brazil, we see that the US interest rate have been rising, and we noticed that last time, all the way to 3%, a little bit above, but has been moving quite sharply due to political news like trade war and things like that. However, breaking just for one day the cloud here in green is not enough to put in question the uptrend. And the fact that it has rebounded above it is reconforting us in the fact that the uptrend in US interest rate remains intact. This is certainly good news for the S&P 500, but we know less good news for the emerging market. And with that, in conclusion, we remain focused on our allocation toward US equity market. That's all for today.